Good morning and welcome back to the Master Series. Now that many of us in the entertainment industry are under stay-at-home orders, Entertainment Partners wants to help production professionals make the most of this time of social distancing by investing in themselves, which is why we've introduced this Master Series of live webinars focused on the business of production and production technology. In addition to hearing from our experts, you're welcome to post questions in the Q&A section of the Zoom call down at the bottom. Just click on that Q&A icon, or you can post questions on the forum at theproductioncommunity.com where you registered for this webinar series, and we'll do our best to answer them. Today's information is going to be very detailed from our guests, so feel free to ask questions because you may very well have some. So throw them in at the Q&A section and we'll do our best to answer those at the end of their presentation. Please note your feedback is important, so please take a moment to answer a short survey after this live webinar. Let us know how we did and also make suggestions for future topics you'd like to hear us cover. Now, today's webinar topic is not COVID-19 related. We're going to be doing a deep dive on how to line up your ducks for an audit, taking you through each stage of production, ensuring that you're hiring and documenting crew accurately so that your production is set up for success when your audit comes around. Strap in, there's going to be a lot of information. And since we're talking audits, you're also going to want to join our next webinar at 11 a.m. today about Smart Hub Vault, where you can permanently store all documents related to your production and have them at your fingertips when that audit comes. Register for that 11 o'clock Smart Hub Vault webinar at theproductioncommunity.com. Now, I'm excited to introduce a murderer's row of payroll and legal experts for this conversation today. Pedro Cuervo is a payroll expert. He is Director of Payroll Services at EP and has over 23 years of experience in entertainment payroll. Alan Wu is Director of Employment and Labor Relations Counsel at EP and is a union contract specialist. He has over 19 years of experience in labor law, and 12 of those are specifically in the entertainment industry. He's formerly counsel at the Alliance of Motion Picture and Television Producers, and we're excited to have Alan. And joining us in a little while is Christina Villegas. She is a manager of audits at Entertainment Partners with over 30 years of experience spanning multiple areas of the entertainment industry. She is a PH&W specialist, and we will see her shortly. So we're going to start off with Pedro and Alan. The way we're going to be covering this, we're going to talk about prevention, risks, and retention, starting with employee documentation, employee classification, talk about non-union rules versus union rules, and the all-important occupation codes. We will cover risks, loan outs versus individuals. We'll talk about shows that flip from non-union to union during the course of production, home plan documents, idle days, and the ins and outs of travel. Then at the end, we'll be touching on Smart Start and how that helps you in the audit process. Pedro and Alan, welcome. Pedro, I'm going to pass it over to you.
Thank you, James, and good morning, everybody. Like James mentioned, today we've been dealing a lot with the COVID situation. Today is completely different. We're going to help you set yourselves up for an audit. The best way to do that is when we start with the basics. Let's start with the basics. The first thing we need is the start card. That's your first line of defense. We want to make sure that's filled out completely and everything is in there. The hire from state, work state, resident state, those kind of items. Your second line of defense is obviously your time card, right? Submit the time cards over, make sure your employees are signing those time cards and that someone from the production office also signing those. What could happen in an audit situation is you'll bring up that time card, it's missing a signature, and the employee has a very strong stance there saying, I never signed that, those are not my hours. And then you can have some difficulties there. The third item is the new W-4. The federal government came out with a new W-4 this year, effective 1/1/2020. Yeah, and what EP provides the federal W-4 form with all its start cards. The state ones are a little different. If you work in Louisiana, Georgia, California, or New York, EP will provide you those. It's the other 46 states that you need to go get yourself. But we do have them on our website. If you go to www.ep.com, there's a new 2020 W-4. You click on that little link and you have all the states there for you to download and give to your employees. Make sure they fill that out properly. Box rental forms. Box rental forms are important that you send in the original one with the inventory list attached to it. And then every week you need to submit one with a different week ending date. That becomes important for an IRS audit. If you don't have that box form, then it should be taxed. The last item is the I-9. There's going to be a new I-9. It's out already, but it becomes effective on 5/1. So when you're turning in your I-9, make sure check the date on it. If it has a 2019 year, then that I-9 is old. And come 5/1, you'll need to submit the new I-9. There's a couple of things that are very important with the I-9 though. There's the employer. At the I-9 section, there's an employer section. That's the person that verifies it, or employer. In that scenario, it's not entertainment partners, that's the employer. It's you, the production, the employer. There's also an authorized rep section that needs to be signed off on. That authorized rep comes from the production office. It wouldn't be entertainment partners. We're not there on the set verifying the documents the employees are turning in, and photocopies don't work. Photocopies are easy to forge, especially with all the modern technology. So you need to make sure that those two items at the bottom of the I-9 are the production office, not an entertainment partners person. All right, I'm going to have this next section. I'm going to have my esteemed colleague Alan here help me out with it. Right. So we've established that we need all these initial documents, but before we hire someone, especially in the non-union world, we need to establish whether they are exempt or non-exempt. Alan, can you give us a little background on exempt and non-exempt in regards to non-union employees?
Sure, no problem, Pedro. And hello, everyone. When you are onboarding people at the start of your project, you're faced with a non-union person, one of the decisions you need to make is this person going to be treated as exempt or non-exempt? So your non-exempt people are your regular hourly folks. Your exempt people are not your hourly folks, right? They are, they get a salary and they do not get overtime. They do not get meal breaks. And that's why on exempt employees, you don't need to actually track their hours, but you do need to submit a time card for them. And people often get confused with the term salary and exempt. They think that means the same thing. They think that means, oh, isn't that person exempt? That person's salaried. Well, that's only one of the tests. And I'll cover the rest of the tests here in a bit. I do want to mention also that the point of this webinar is to help you line your ducks up in case of an audit. That audit can happen, maybe it's from the government, maybe it's from the union, maybe it's going to be a private lawsuit. And this issue of exempt versus non-exempt is an issue that can happen if a worker goes to a government agency and files a claim, or they might go to talk to an attorney and then next thing you know, you have a lawsuit. So it could happen in both ways. Now, the exempt individual, true, they are on salary, but let me cover the other elements, the other tests that they also must satisfy in order to be deemed exempt. The first test is the independent judgment and discretion test. So this individual must have some independence in their judgment and discretion in the work that they are doing. If they have to constantly go to someone else to run their decisions by, then that person does not have independent judgment and discretion. That's not to say that the person has absolutely no supervision. So think of even your CEOs in a company, right? CEOs have to report to somebody. CEOs have to report to their board of directors. So it's not that there's an absence of supervision, but that this person has that discretion to go ahead and make those decisions on their own without constantly checking with someone else. Now, the next test is called the duties test. And in our world, we're going to be faced with most likely these three exempt categories, each one having a different duty. And I'm just going to summarize it here. They're actually, the test is actually more complex, and there's lots of material out there that you can read up on this issue. So I'm just going to summarize it here. The three exempt statuses that you will most likely be faced with are your executive, administrative, and professional. So your executive exempt status person sounds just like what it is. It's the executive. This person is engaged in executive decision making. Think of this person as the boss, or the person that drives the ship, captain of the ship, so to speak. And then you have the administrative. Think of the administrative, just for ease of conceptualizing. Think of the administrative people as kind of like your next layer of people underneath the executive, who is carrying out the decisions of the executive so that the operations of the business are going in the right direction, in the direction that the executive wants the ship to go. So their work has to be primarily related to management or business operations. And so you think, oh, wait, so what about administrative assistants? They have the word administrative, aren't they? Aren't they administrative? No, it goes back to the duties. So the duties, what I mentioned just a moment ago, the administrative person carries out duties that are related to the management or operations of the business. And your administrative assistant's probably not going to be that person. And also, there's that test I mentioned earlier, independent judgment discretion. Administrative assistants aren't going to have that independent level of judgment and discretion. They're probably going to be running their work by someone else that's supervising their work a lot of the times or all of the time.
So when we're talking about the executive, we're probably talking more of the producer person, right? And when we're talking about the administrative, those are more of our accountants and our UPM, correct?
Correct. So, right. So when you think of your executive, just think of, who is my executive team? Usually people have kind of good idea what that executive team is. Your producer, there's probably going to be a studio exec behind that producer. UPM might be an executive, but if it's not an executive, the UPM could definitely fall within the administrative exception, and as well as your accountant could fall within the administrative exception as well. And then the last category, the third category, is the professionals, the professional status, the professional exemption status. And there's a few types. One type is your licensed professionals, such as your doctors, attorneys, engineers, architects. And then there's another type, that the learned professional who engages in a lot of formalized study to get to where that person needs to be. You think of that person as kind of like your scientist. And then the last category under professional exempt status is the category that fits, that applies most of the time in our industry, which is the folks that are engaged in work that is in a recognized field of artistic endeavor, right? So our folks engaged, they're artists. They engage in a field of artistic endeavor. What is artistic endeavor? I like to think, a good barometer of that. If you think of your Oscars has categories for different types of work that is in our industry. And those people who are getting an Oscar in those categories, they are engaged in a field of artistic endeavor if the Academy, if the Oscars, if they get recognizes that category, right? So I think it's a good barometer. It's not to say that you can't have someone that's outside of those Oscar categories and still have an artistic, still fall within this artistic endeavor category. But I'm saying that if it is one of those Oscar categories, then you have a very good argument that this is a recognized field of artistic endeavor.
So we're talking about our writers, our actors, our editors, those kind of employees. Those would fit under that category.
True. So also, those people will fall within that category. There are other categories. So think of, there's an Oscar category for editing, right? So if you think, just using editing as an example, you have your editor, you have your assistant editor. Your assistant editor, whenever you see the word assistant, that should throw up a red flag for you, because the assistant editor is probably not the one that is going to be making the final decisions on what to cut. It's going to be the editor, right? And so going back to the earlier test I mentioned, independent judgment and discretion test, the assistant editor probably is not going to meet that independent judgment and discretion test because their work is being supervised by the editor.
Excellent.
And then the next part of the test is the salary test. That's where people get the salary idea from, right? The salary test, there's two parts. There must be, there's a salary basis test. The individual must be making a weekly salary that is preset. It doesn't change no matter how much work, how many hours are worked in that week, how much work is performed in that week, or the quality of that work. And then there's the salary threshold. So you have to get paid on a weekly salary, and it must be above a certain amount. So in California, that threshold is 80 times the state minimum wage rate for that week, for 1 week. In New York, that's 75 times the minimum wage for that week. The federal level, so let's say you're in Louisiana, where Louisiana doesn't have a minimum wage, a state minimum wage. They use the federal minimum wage, and that's $7.25 per hour there. But if you're in one of those states that are using federal law, then that federal salary threshold Right now, it's $684 per week.
Mhm.
I do want to mention there is a special category under the federal law. It's called the motion picture employee exception. And normally, as I mentioned, the individual must be making a weekly salary. Under this exception, the motion picture exception, motion picture employee exception, the person doesn't need to be making a weekly salary. He could be making a daily salary as long as that daily amount is above a certain amount. So that weekly number right now is $1,043. And you could prorate that to a daily amount, but the way you prorate, you can never use a week that is more than 6 days. So you can divide by 5, divide by 6, as long as whatever that division comes out to be, that week's salary equates to 1,043 or above, then you fall within this category. And it's important, this idea of misclassification, because, you know, a lot of lawsuits out there that is someone claiming that, oh, I shouldn't have been classified as exempt. I should have gotten overtime. I should have gotten meal breaks and meal penalties. In California, that's a very hefty penalty because there's a 30-day waiting time penalty. And so it's very important in terms of lining your ducks up in a row for that, you know, possible government claim or possible lawsuit, that you don't misclassify these folks.
Very cool. Again, I noticed, Alan, you mentioned exempt, and you also mentioned salaried, or you haven't really mentioned salary, but I know there's a difference between the two when it comes to a CBA. What's the difference between an exempt employee and a salary employee in the eyes of a CBA?
Very good question. So in the CBA world, those of us who have worked with a collective bargaining agreement, a CBA, you'll notice that the CBAs don't really talk of the workers that are covered in it as either being non-exempt or exempt. They're either going to be a daily or a weekly or an hourly or an on-call category. On-call is kind of the closest thing you have to exempt, but it's not really the same thing. And I think it's smart to whoever framed this in the collective bargaining agreements that they didn't use the word exempt, because on-call is really not the same thing. On-call is someone who gets a minimum scale for the entire week, but they'll still get premium pay, like if they work on a 6-day or 7-day or a holiday, and they still must get the meal breaks that the collective bargaining agreement calls for. Earlier, I mentioned exempt employees don't get overtime, they don't get meal breaks. Well, that's not what an on-call person is. An on-call person does get those things. So I think it's smart that the CBAs don't use the word exempt, and instead they use the word on-call, which is really not the same thing.
Yeah, so a good example of that is our buddies when we were talking about the editors, an on-call editor with the CBA, they actually get gold when they go beyond the 12. So that's a really good example. That's important, right? To whether it's an employee is exempt or not exempt. What's the difference between an independent contractor and a loan out? Or can you talk to us a little bit about those two items?
Sure. So an independent contractor and a loan out. The loan out is really a species of independent contractor. So in our world, in the motion picture industry world, loan out workers are loaned out by their loan out company. What is that loan out company? The loan out company is a company that they have formed, this worker has formed on their own. And that company is then really technically considered their employer, because that's the company that is loaning that worker out. Hence, they're called the loan out company. The worker that's being loaned out from that company is called a loan out worker. And so the independent contractor, as well as the loan out worker, they don't get a W-2 like regular employees do. They get a 1099 at the end of the year. You don't pay payroll taxes on them, and they don't get overtime. So they're treated really like they're treated separately from an employee. If you deal with independent contractors in your life, like such as your plumber, your electrician that comes to your house, it's kind of the same thing. You pay them a set amount for the job they do, and then they're out of there. They're done with their job. They leave your house. So that's really what the difference is. That the independent contractor doesn't have this corporate structure. So it could be like a solo person, like that electrician, that plumber that comes to your house, that just does that work, and it's just that individual. A loan out corporation, a loan out structure has this structure I described, where there's a loan out company, and then the worker, a loan out worker that's being loaned out from that company to go work on your motion picture project.
Very cool. I know Joe Scudero covered this last week. They had a webinar regarding AB5. California's got this new law that came out, right? And so it's a little, it went more in depth, but do you want to give us like a brief overview of what AB5 is and how that can impact some of our clients?
Sure, not a problem. So it's important that you classify people correctly, right? In terms of your audit, in terms of potential lawsuit. So Joe did a very good webinar, a 1 hour webinar last week. If you haven't seen that, please go check that out. The EP legal department also created a legal alert that is available on ep.com. And there's more detail on that as well. So if you go to ep.com and go to the search bar and just type in AB5 legal alert, then you'll find that alert there. And it goes into greater detail than what I'm going to talk about here. I'm just going to summarize here, just talk about it briefly. So in last year, California passed AB5, a piece of legislation that makes it more difficult for a hiring entity to deem a worker as an independent contractor. And so there's something called an ABC test inside of AB5. And that actually came out of a Supreme Court decision. But the ABC test is 3 parts. When you take a look at that worker must pass all 3 parts of the ABC test to be deemed an independent contractor. So part A of that test is the worker must be free from the control and direction of the hiring entity in connection with the performance of the work. Now, if you think about the people who are working on your project, how many of those people do you think are free from the control and direction of the hiring entity in connection with the performance of their work, right? So that's a very hard test to meet. Part B of that test is the performer performs work that is outside the usual course of the hiring entity's business. Well, for you guys, the hiring entity's business is motion picture production. So how many of your workers can you think of on your crew that are working on your crew whose work is outside of your motion picture production business? So again, very difficult test to meet. And then part C of that test is the worker is customarily engaged in an independently established trade, occupation, or business of the same nature as the work that is performed for the hiring entity. So that just means that that person is not only doing work for you, but is carrying out that same trade, the same occupation for other hiring entities as well. And so if this person does not meet the 3-part ABC test, there is a business-to-business exception under AB5, which I won't go into detail here, but just know that there are 12 factors in the business-to-business exception, and the individual must meet all 12 factors. So if you want to see what those 12 factors are, you can go to the EP legal alert that I mentioned earlier. And so if the person doesn't meet the ABC test, it's a possibility they could still fall under the business-to-business exception, the 12-factor test, and still be okay. And then the last part I want to mention is that other states are following California's lead. New York, for example, has legislation pending in its legislature where they want to copy the same kind of concept as AB5.
Very cool. Alan, you sound really impressive. And I wanted to hire you to work on my show. So I get an EP start form for an individual and I hand it over to you. You come back and you tell me, well, I've formed my own corporation. Can I just pay anyone as a corporation or a loan out, Alan?
Another good question, Pedro. So 2-part answer to that. The first part's easier. So EP will only accept certain kinds of companies to be a loan out. And those 3 types are the loan out company must be a corporation, or it could be an LLC that is taxed as a corporation or owned by a corporation. So if it's an LLC that's just owned by you, a solo individual, and you do not form another corporation, and that LLC is being taxed in the same way that you are being taxed as an individual, not as a corporation, EP will not accept that as a loan out company. Now, the second part of the answer to your question is more difficult. So you think about the misclassification issue, right? Earlier I mentioned your non-exempt hourly employees and why they can't be considered exempt, because they are the people who are on the front lines. They're doing the manual work. They don't have the independent judgment or discretion. Their work is typically supervised a lot on the set by one of your supervisory people. And so, and then you think about the idea of a loan out, independent contractor. That person is supposed to be free from control or have very minimal control by the hiring entity. I go back to part A of that test in the ABC test, right? In other states where you don't have AB5, you're still going to have tests in those states as well to figure out whether a person is an independent contractor or an employee. And all those tests have in common the degree of control that you have over this individual. So going back to the plumber, the electrician that comes to your house, you don't really control what they do, right? You open the door, they come in, they do whatever they want. They finish it, they're out of there, right? And that's it. So an employee who is hourly is someone who is really the opposite of that, right? Because you're really controlling them. You're supervising them a great deal on the work that they're doing on set. And so you want to really be careful about allowing an hourly employee to have a loan out company. Now, for your non-hourlies, your exempt people, those, yes, you're going to have a lot of people that want to come to you who are exempt and that want a loan out to use their loan out company. And so, yes, there is a risk because going back to those AB5, ABC tests I mentioned earlier, as well as the degree of control test, you want to think hard about that. And, I understand that there's going to be business considerations. Sometimes there's that actor, there's a director that you really need, and they have a loan out company. They won't work for you without it. So, I understand there are business considerations. So just know that sometimes you're going to have to relent and you're going to have to make that business decision on whether that is an acceptable level of risk to you or not. The last point I want to mention is that a lot of these folks who want loan out companies, they're covered by a collective bargaining agreement. So it's not as though they have no protection at all, right? So you think about independent contractor, the gripe that a lot of them have when they claim misclassification is, oh, I didn't get overtime. I didn't get my meal break. Well, guess what? The CBA has those rules that provide premium pay, that provide meal breaks. So the union folks who are covered under a CBA, they at least have the CBA that's already providing those kind of things that a normal employee would get. So those people are more protected if they're under a CBA.
Yeah, excellent, Alan. You covered a lot of things here between exempt, non-exempt, independent contractors, loan outs. Here's where I'm going to bring in Christina to help me with the next few questions. Welcome, Christina. There's another component that drives all this, especially with MPIP, that is the occupation code. I'll go over that in a little bit. I just want to stress the differences between non-union and union. Right? In the non-union world, we established exempt versus non-exempt. In the union world, the CBA makes it a little easier and a little more complicated. The difference in the CBA is there's 3 classifications. You have your dailies, which are hourly employees. You have your weeklies, which are also hourly employees, but they have a weekly guarantee. And then the last category, like you mentioned, Alan, is the on-call, which are basically your weekly salaried employees, but they do have some premium pay and provisions like that. So that's just a brief synopsis between the non-union and the union world. Just make sure you look at your agreement and you know which agreement you fall under to see where each one of your employees gets classified or the occupation code that they'd be under. Alan, I also notice that you mentioned with exempt employees, when we're talking exempt, we're talking non-union, that they shouldn't have hours. But there is one exception where we do want to actually put hours in there. And that's when we're having a show go from non-union to union. In those cases, we actually want to put the hours up front while we wait for the agreement to be executed. That way, when we do the year to date and we move everyone over from the non-union world to union world, the hours are there. Because hours are very important. Christine, here's where I'm going to hand it over to you. Can you tell us the importance of hours when it comes to an audit?
Sure thing. Thank you, Pedro. So it depends on the union and whether PH and W is based on hours or days. An example would be MPIP, which is your Motion Picture Industry Pension Health Plan. They handle your Hollywood IA and West Coast union locals, and the majority of those locals utilize MPIP, and each local is issued a code based on their description. And depending on what the code in the local is, it's a rate group that they fall under, which is the composite of the rate that's utilized to calculate the hours times the rate and you'll have your PH and W. ASA utilizes INBF the majority of the time, and in that case, you'll have days times an amount, say $25 for pension, so $25 a day for pension, and it could be even a number of things. They'll sometimes utilize hours and days. So you need to make sure to meet that guaranteed amount of hours or days when you're doing payroll, because if not, definitely it'll open up for an audit. If something's missed, it will come up.
Excellent. So just brief summary of that. Our West Coast, our MPIP, for those who don't know it, that's motion picture industry plan. Those are our hourly employees. They deal a lot with the per hour and the percent for the IAP, which is the individual account plan. And the per day ones is usually, like you mentioned, IANBF, which is IATSE National Benefit Fund. Those do a per day, which is usually your East Coast people, your area standard. When we're talking about ASA, area standard agreement. There's one that I also want to cover here real quick, and that's our director of photography. They get into a little bit of a sticky situation. When the show's non-union, the director of photography actually does qualify for the exempt status, Alan, like you were mentioning, right? They have all the components for it. So we'll get a time card for them, and it'll just say worked on it. Because in the non-union world, the director of photography can be exempt. The problem is when that show flips to union. In the CBA, the director of photography is not an on-call classification. They are actually hourly. When you look at their agreements, they all tie into either hourly or weekly. So it's very important that if you know the show's going to flip, that we actually have hours for those directors of photography, because the audit's going to come back, and when we show the auditor that time card that just says work, and we're reporting 60 hours, 65 hours, 60, whatever number of hours we're reporting, they're going to come back to us and go, where are you getting those hours? Those time cards are blank. That can be an issue, right, Christine? When that happens, yeah. So we've established that we started out as non-union. We were smart enough to put hours for our exempt employees, and we are kind of aware of the occupation code. Christine, can you tell some of the things that an auditor would look at in a show when it goes from non-union to union?
So the auditor will look to see if the guarantee has been met based on the occupation. The CBA tells us whether it's daily or hourly or weekly employees. If there are non-affiliates, there is a weekly guarantee of hours that needs to be met. Example, Code 79 producers group, they have a 60-hour a week guarantee. During the time of production, you need to pay them the 60 hours, whether they work a week or not. So just it's 60 hours of contributions need to be remitted no matter what. Also, the occupation code generates a scale rate. If you utilize an incorrect occupation code, the scale rate could be incorrect, and in that case, the IEP can be incorrect, because the IEP is derived by your scale rate. So it's rate times hours times IEP percentage will give you your IEP. That's something that we find is a problem at times.
Yeah,
Go ahead.
So you were mentioning, when you mentioned the non-affiliate, so what you're saying basically is if I have a producer who works only 3 days,
Yes, for your Code 79.
they still get paid their full 60 hours of PH&W, correct?
Yes, yes.
Yeah, and that could be a problem because there's no partial for those guys. Hopefully that explains to our clients. We have a product that can alleviate a lot of that, and that is our Smart Start program. I don't want to make this a sales pitch for it, but the program does cover up some of the mistakes that clients can make. Smart Start, for those of you that don't know, is our digital onboarding program. It will guide you, for example, if you want to pay a union person, like our DP friend, in their CBA, if you want to pay them as on call, Smart Start has those OC codes locked in, and it will come back and say, hey, no, you cannot pay that person as on call. You have to pick one of these 3 or 4 schedules. The other thing, the advantages of Smart Start is also, it comes with the I-9 already, and it also comes with the W-4. And it's really easy to use. Like you'll send the deal memo over to the employee, they'll look at it, they'll sign off on it. And once they fill out that digital information, once it locks in their personal data, their address, their date of birth, all that information is locked in. So it makes it real easy to onboard them after the fact. Our clients love it, and so do the employees. Now, this next topic I want to address a little bit here, Alan. It's probably for the audience that we have here, or most of the audience that we have, and that's our non-affiliates. And they can get into a little bit of a situation every once in a while. Can you tell us where we can help them get through an audit?
Sure. So non-affiliates, think of them as being not affiliated with a union. That's where the term non-affiliate comes from, because these are really non-union folks. And why they get this special treatment is that because MPI, the Motion Picture Industry Pension Health Plan that we were talking about earlier, this plan provides pension and health benefits to these non-affiliate people. And there are special rules. Not just anyone could be a non-affiliate, but there are special rules that you have to meet in order to be deemed a non-affiliate. It's important for our auditing process, though, that the non-affiliate worker submits to the production, and then the non-affiliate MPI election form. So MPI requires each of these people to elect to participate in MPI. The only exception is for the non-affiliate accounts. The non-affiliate accounts don't have this form, but the two other categories that I will mention in a moment, they do have that form. And a lot of times that form is missing, forgot about it, just someone didn't think that to ask for it. And that becomes a problem down the line when, say, for example, a non-affiliate producer learns from MPI, oh, a year from now, oh, their MPI is denying my health benefits. And why? Because back on this project that I worked on last year for a few months, there was no election form. There's no MPI election form that was submitted for that person. And that becomes a problem because there's a deadline that you need to submit that election form by. And that deadline is within 60 days from when the person becomes eligible to be a non-affiliate on that project. So if you're past that 60-day mark, you're going to have some trouble with MPI, getting MPI to accept your form. And the danger there is that, if MPI kicks out those hours a year from now, but let's say this person unfortunately has some kind of major medical procedure, costs $65,000. Now those hours get kicked back out of the health plan, and who's on the hook for that $65,000 surgery? It's going to be the entity that's signatory to the union, signatory to MPI, and that's the production company or the studio that's signatory. So that's a huge problem. So that's why you got to get that MPI election form in there. Now, I mentioned non-affiliate accountants. There's two other types. There's the non-affiliate producer group and the non-affiliate freelance post-production supervisor. The producer group has three types. It's the executive producer, the producer, or the associate producer. They can be non-affiliates. And then the freelance post-production supervisor, that's just one category. There isn't a divide like there is for the producer group. And it's important that you use these job titles, because if you use the job titles a little bit different, like say line producer instead of associate producer, instead of producer or executive producer, line producer, that the MPI is not going to accept that. And so there's a bunch of different rules that comes into play when it comes to non-affiliates. Some of them have to be hired from Los Angeles County. Some of them could be hired from either LA or New York City. And for non-affiliate accountants, for example, there's this odd rule where if you hire one out of New York or New Jersey, they cannot go work overseas outside of North America. But if they are hired from Los Angeles County, then they can. There's a bunch of different weird rules like that. So I won't cover all of them here. That would be way too long. But just know that they're not anyone could be a non-affiliate accountant, or non-affiliate individual, and that there are a lot of rules that you must jump through in order to qualify.
Yeah, and like you mentioned, they're real sticklers for their job titles, like for the accounts, an auditor or a controller. That won't fly. You have to be very specific on those titles for sure.
Oh, there's one more thing I should mention. So the MPI audits, going still on auditing, that's the whole theme of the webinar. The audits, MPI audits in the past year have gotten really stringent on non-affiliate hours. So a couple of our clients got hit with this, where even in weeks that the non-affiliate was not working, right? MPI is going to look for hours in those weeks, which is an odd concept. It doesn't seem intuitive. Or you're not working, but you have to submit hours. Well, that's what MPI saying must happen, because a certain language that's in the MPI non-affiliate rules. So the only way to get around that problem is you have to have different employment contract and a different start form for each segment of that individual's employment. So let's say you have a non-affiliate producer that's going to work on the project. For a better example, a post-production supervisor, that this individual is going to work on the project in post-production for a couple of months. And then there's going to be a gap of a couple of weeks or a gap of a month in between. And then the person's going to continue working on this project again after that gap. Well, make sure that each period of employment, that you have an employment contract that has a start date and an end date for each period of those employment, and a new start form for each period of that employment, so that you don't get charged for those hours in between during the, when there's no work happening.
Very cool. So speaking of
Yes.
documents that we need, because non-affiliates, we need to turn in the opt-in forms, right? Christina, there's another document that we need for some of our other MPIP employees. Those are the benefit redirections, or our home and away plan docs. Can you give us a little background on that?
Yes, if we're told during the time of payroll that the employee has a home plan in place, we can remit contributions to MPIP even if they're working outside of a local's jurisdiction. So we need to make sure that that paperwork is given to MPIP, because that's a responsibility of the production company. Because later on down the line, 3 years later, when the audit's done and the home plan's not in place at MPIP, they'll reach out to us and say, there's no home plan. We're going to have to reverse these hours. And then we reach out to production to no avail, because whoever was supposed to remit that home plan to MPIP maybe didn't, or they can't locate it. And then now we have the issue of if there were premiums paid, if there was an illness and they were hospitalized, top of the reversal of hours, and the client, being the signatory, is liable for all that. So it's very, very important, because they are responsible for giving that paperwork to MPIP that it's handled.
And it becomes even trickier when we're talking about sending benefits to IA National and trying to get that money back from them, right?
Yes. Yes. You only have a certain amount of time. You can't take a credit from IA National. You need to request a refund. So what happens is, if you, on the flip side, if you remit to MPIP, if you remit to INBF, and it should have been to MPIP, you will at times, if for whatever reason we don't receive the refund in time, or they deny it, you'll have to have paid two locals, because INBF got the money, but now MPIP needs the money. So if that refund's denied for whatever reason, then you have to pay it twice.
And that can get expensive. Not only you're remitting
Yes.
for one, you're remitting for both. That's double. That's going to throw your fringes off and your budget off.
Yes,
So
definitely.
that's something ideally you want to mitigate. Excellent information. Did we miss anything that you wanted? Did a savvy auditor are you looking for, like maybe distant locations or like DGA, something like that? Do you have anything for us?
Idle on distant is definitely one of their favorites. Make sure if you take an employee on distant, that the idle is on your time card. Travel is another. Travel needs to be specified on the time card. There's travel worked and there's straight travel time. Travel worked is subject to PH&W. Straight travel isn't, and it needs to be on the time card listed as such, because we can make the dispute, but without the evidentiary support, it's going to be denied. So please make sure to specify on your time cards with regards to travel. Creative accounting is another issue. So if you have a non-covered class and you pay him under an account that you pay your covered classifications, and then the audit comes around, they will request ledgers and Bibles. And if they pick that up on an audit, you need to prove that they didn't work in a covered capacity. That's another issue. With your above the lines, we find that the DGA UPM, which is usually the issues on a low budget feature, they have a minimum of contributions that need to be remitted. So if your UPM producer, say you pay the UPM portion $50,000 and the producer portion is $25,000, that's $75,000 in salary. You need to remit $100,000 subject to PH&W for contributions. So even though you pay them $75,000 in salary, the contributions need to be based on $100,000 for a DGA UPM.
So you're not saying I need to pay him a total of 100,000. What you're saying is I have to pay the 18% of the 100,000, the $18,000, right?
Yes, yes,
Awesome.
yes.
Awesome.
Okay. And then the other thing is deal memos. Make sure if there's a revised deal memo that your paymaster as well as the union have the same deal, because there are revisions all the time to contracts and to deal memos. If one or the other doesn't have it, it's going to cause an audit. It just, it will. SAG, here's another one. SAG television. We need to have those episode numbers. We need to. It causes a major problem. It'll be an issue with the ceiling, and it will get picked up in an audit, and then there's delinquencies involved at that point. So please make sure to issue an episode number for each television project. It has to have an episode number.
And it's not good enough, like you mentioned, it's not good enough to have it just in the comment section. We need that episode number somewhere in the GL stream. That's the only way that our system will recognize it. Alan, do you want to give us a little background on why that's so important when it comes to a SAG TV series?
Sure. So when it comes to SAG, P&H, pension and health, there's a cap per picture. So when it comes to a TV series, each episode is considered its own picture. So each episode has its own cap per performer. Not the same case in the theatrical side, because theatrical side is just one picture, right? So there's one higher cap that's for a theatrical. But on TV side, the cap is different depending on the length of the episode. So a half-hour episode, the cap is 15,000. A 1 hour episode, the cap is 24,500. Now, our system, we're going to set that show up as, let's say it's going to be half hour. Our system is going to set that show up as a half hour, and it's going to have that $15,000 pension health cap for your SAG folks. But if the paymaster doesn't know, or if the data that's sent over to EP, you don't indicate in the GL stream that there's different episodes involved, then we're not going to know there are different episodes involved. We're going to treat it as though it's one episode. So now guess what? Back on episode 1, your actor, your one particular performer, or maybe many of them hit that $15,000 cap on that episode already. And then they go on to work like 10 more episodes after that point. But because there were no episode numbers attached to the data that's sent over to EP, we didn't know that was all separate episodes, each getting a separate cap. So everybody hit their cap back on the first episode. Now later on, SAG Pension Health Plans comes back and say, hey, where's the rest of the contributions for the remaining 10 episodes? And then you would have drastically underpaid your pension and health for your performers.
Yeah, so now the show's wrapped, all the finances are closed, and we're sending them a big old bill for 9 more episodes of pension. That can become really annoying, really inconvenient.
Yeah. Doesn't go over well.
No, it does not. Christina, I know you mentioned some stuff about travel and those kind of items. Is there anything that we might have missed, or that you want to elaborate a little more on travel?
Definitely when you bring somebody, say for instance from Georgia, to work through MPIP, they have to be hired in LA. You have to either fly them out so that they're definitely hired from LA, because if not, that will get picked up in an audit and it will be questioned. You need to make sure that whoever you have working through MPIP that's from an outside state needs to be hired in LA.
Very cool. Alan, I think is there anything else on the travel? I think there's some other stuff. We might need some documents or things when it comes to travel.
Yes.
Yes, right. So travel documentation is important for this reason. So going back to, there's just so many unions, and there's so many different kinds of trust fund benefit plans around, that each one has their own jurisdiction. Some unions belong to one plan, some locals belong to another plan. There's many plans around the country. And so when it comes to MPIP, HP, Motion Picture Industry Pension Health Plan, they have a rule where a lot of the unions that go under that plan, they must be hired from Los Angeles County. Not every local that's under MPI needs to have this rule, but there's a lot of them that do. And so let's say, I'll give you an example. An audit happens on a project, and the auditor sees on the start form for me, I'll say I'm the worker, see the start form and says that I was on the start form indicates I was hired in Georgia, and I'm also working in Georgia, but I'm getting MPI benefit contributions for some reason. That shouldn't happen unless there's a home plan letter or the person was hired from Los Angeles. Now, the home plan letter is a device that used to exist. It doesn't exist anymore, except for certain grandfathered individuals. Those grandfathered group is very small. And so the home plan letter used to allow people who get MPI, they used to be able to go to a different state, move to a different state, and then when they work there, they'll submit this MPI home plan letter, which what it does is that it redirects those contributions that would have gone to their default pension health plan. It redirects those back to MPI. Now, the home plan letter, the MPI got rid of that home plan letter back on April 1, 2014. So unless you were grandfathered in prior to that point, meaning that you already had the home plan letter, you're using that prior to that date, then if you never used it prior to that date, then afterwards, nobody can use that MPI letter anymore, except for those, as I said, those grandfathered individuals. So the auditor's looking at this and saying, hey, so Alan is working, so it says here in the start form, higher state, hired from Georgia, working in Georgia. Where's his home plan letter? And then they'll contact EP, where's his home plan letter? Maybe they'll contact the production, where's his home plan letter? And then there's no home plan letter, right? And then you find out the worst news is that, oh, Alan can't use a home plan letter because Alan never used one before April 1, 2014. So now the only other rule left is Alan must have been hired from Los Angeles County in order to get MPI, but I wasn't hired from Los Angeles County. So, one way to do that, I think Christina mentioned this earlier, to fly them out. You have to fly them out to Los Angeles and then do their deal memo when they're in Los Angeles. And then that satisfies the condition of being hired from Los Angeles. That goes back to non-affiliates as well. Earlier when I was mentioning some non-affiliates must be hired from LA County. Some could be hired from New York City. If there was somebody that was living in Georgia, well, you're gonna have to fly them to those places and then do their deal memo while they're over there in those cities, in LA County or New York. And that's when they're now considered hired from. So it's very important to keep that travel documentation. MPI is going to want to ask you, okay, so prove to me this person was hired out of LA County. Okay, well, here's the receipt from Expedia. Here's the plane ticket. Here's the hotel receipt, right? Those kind of receipts, those things are very important to keep. And then going back to the start form, one of those basic items, the first thing that Pedro mentioned in this webinar, start form. The start form, make sure you accurately fill that out. Those two fields, hired from and working in, those two boxes on the start form, very important because they drive what pension plan the individual, what pension health plan that individual is supposed to fall under. So when the paymaster looks at that, they know what they're supposed to be doing with that information. So those two boxes are very important to get the right plan, and so it's not going to become a problem later when the audit happens.
Yeah, I'm going to cover one more thing. So when you fly those accountants into LA and then you take them back to Georgia, now they're distant conditions. So just because they live there and work there, because you hired them in LA, it becomes distant, and the auditors are going to look for those idle days again, right, Christine?
Yes, definitely.
So before we move to the Q&A from the audience, Christina, any last minute things you want to cover?
Please keep your correspondence. Make sure to keep any kind of revision that's done to your agreements. Let your paymaster be aware of it, because they can only pay what they know or how they were told to pay originally. So that's definitely something we find. The revisions to the agreements, the deal memos that, the revisions that were given, those are things that we need to keep that open communication, client
Awesome.
and paymaster.
Thank you. Alan, anything from your side that you want to cover last minute?
I think we pretty much covered everything. I just want to, re-stress the idea that, getting that documentation up front is your best defense to an audit, right? Your home plan letter, your non-affiliate election forms, your start form, the employment contract with an end date, start date, end date for those non-affiliates, so you don't get dinged for that period in between where they're not working. It's your documentation that you collect up front is your best defense against an audit.
Awesome. James, we've covered a lot of topics here. Is there anything from the audience you want to throw our way?
Yeah, there's some really great questions here, and we don't have a ton of time left, but I definitely want to get to some of them because there's some really good ones. So if you guys can churn through these with as brief an answer as you can, but we still want to get to, complete information. So the first question, who are the most active auditors in recent years, and what changes in audit activity have you seen recently?
Yeah, I got that one.
That's right up your alley, Christina.
MPIP is definitely the most active, and it's grown like definitely at least 5% in the last year. I
Not
mean, they
5%,
audit
5 times, right?
five times, yeah, 5 times, and they audit every project. And now they do audits, desk audit review as well. So as a project's going on, they're auditing
So they're auditing every project.
every project.
So what are the top 3 issues that auditors are looking for in the last year on productions, and what issues yield the most revenue to auditors?
It's got your name all over it again, Christina.
Yeah. Idle is a big one. Idle, the guarantee of hours. Definitely another one. I can't tell you the hours. The hours generate the majority of the billing. And then on top of that, you have your delinquencies, you have your audit costs. It can get very expensive.
Yeah, I was
very expensive.
I was gonna say it's not just that the audit purpose is that they add all those liquidated damages
Yeah,
and late fees at the
exactly.
end of it. That's what drives up the audit costs.
Yes.
For sure.
Yes.
So here's a similar question, and this is for you also, Christina. Has EP seen a rise in audits in a specific area?
It's always, MPIP's always been done the majority of the audits, but definitely the East Coast audits. I've never seen them as active as recent. We're talking, I can tell you local 764, local 829, definitely.
Here's another one. Does EP track DGA director PHW caps on TV pilots?
DGA director, DGA director,
Yeah, we do. If there is a cap, whenever there's a cap, we program our system with that cap.
Yeah, the problem is that the language for the DGA is a little awkward.
Yeah, I don't think that does.
It's a little awkward language in the DGA, but maybe we'll research and then we can post that one afterwards.
Yes.
Yeah.
Okay. Next, this is a multi-part question, so I'm going to get all of it out. And if, as you guys answer it, you need me to restate any of it, just let me know. Can you explain what FLSA is? Does this usually only apply to non-union situations? Would FLSA be subject to audits? If so, who looks at those calculations?
Okay, I can take care of the first 2, I think. FLSA is the Fair Labor Standard Act. It is not specific to non-union. It covers everybody, and it's mostly for your hourly employees. What FLSA is, it's trying to prevent the employer from supplementing an employee's income using a box rental or something like that. That's usually the biggest trigger, the taxable box rental. And what it does is you have to pay a premium on the additional money of that taxable portion. So that's basically what in the union world, meal penalties, night premiums, again, taxable box rental. Those are the main ones that will trigger the FLSA. Alan, do you want to add an additional part to that?
Sure. So FLSA, Federal Labor Standards Act. So it's basically the federal law that controls a lot of employment conditions, minimum wage, overtime. The FLSA, you're going to see FLSA mostly in that regard. Now, so that's just a federal law. So in states that have their own, like California, New York, you're going to have their own state law added on top of the federal law, which is more stringent. So the federal law is just a baseline. So even though you're complying with the FLSA, you still need to comply with the state law as well. So if you're in a place like Louisiana that don't have their own state version of this, then the FLSA is going to apply. FLSA is also, earlier I was talking about those exempt statuses, executive, administrative, professional. That's where that part of the law comes in, that talks about, what are considered these exempt statuses. There's actually a bunch of other exempt statuses, but that don't apply to our industry, so I don't mention them. But that's where that information or those rules reside, is in the FLSA.
So here's a really, really fantastic question, and I think it ties back to Christina's point a little while ago about everybody, every production getting audited now. How many years after a production has shut down can an audit take place? And what are the document retention rules in terms of years that documents need to be retained? That sounds like a combination of Christina and Alan there.
Yeah, yes. So I think our retention is 10 years, retention of documents for entertainment partners. But not to say that auditors can't go back. If an audit's been opened, and it may not be necessarily opened with EP, if production had an audit that was open prior to, prior to the 10 years, and they are responsible to finish that audit. But I think it's 4 years for an audit, 10 years for retention.
So just to clarify, actually, you're talking about retention there, but how many years after a production is shut down when audits are typically taking place nowadays?
4 years, about 4 years, 4
Okay.
years. But here you go, MPIP, when somebody goes for retirement and they can go back to research as far as they need to for when the pension's issued. So if somebody's of retirement age and MPIP needs to go back and research, they will go further back, as far back as they can. Not necessarily that they'll get the documentation, but when somebody's of retirement age, they do the research.
So I'd like to add to that. So I looked into this issue a little while ago, specifically MPI. So MPI's authority in this regard on how long after a production wraps, MPI's authority to audit is pretty broad. There's actually, I could not find a endpoint to when that statute of limitations applies to MPI audits. So, it depends on each benefit plan, but I just know that MPI has very broad authority in this regard, and there's no actual end date for that statute of limitations. So, earlier we mentioned MPI does audits every show. So, if you just wait for that audit to happen, when that audit's done, then you can do whatever you want with those files, but you got to wait for that audit to happen.
And that could be 10 years, or it sounds like maybe even a little bit more.
I don't think it can be. I don't think that I have not heard of one going back that far. So I think it just depends on what's in the work stream, right, that MPI currently has for its auditors. But I never heard of one going back that far before.
Okay, so we're almost out of time, but there's 2 more questions I definitely want to get to here. And for those questions that we weren't able to answer, we'll post them in the productioncommunity.com with answers. If my company receives an indication they are going to be audited, does EP provide assistance? If so, who should I reach out to?
Yeah, that would probably be me. so it's payrollaudit@ep.com. And you can forward the announcement letter to that email address, and we'll review it and see if it's actually a PH&W audit, because that's what we handle, is PH&W audits.
Great. And last question, and it has the risk of being long, but you guys really only have about 90 seconds to answer. When a non-affiliate travels to New York or LA to be hired, do you need to show just the travel from New York or LA to the location, like Georgia, or do you need to show both the travel from Georgia and then back to Georgia from LA?
Alan, you want that one?
Yeah.
Go for it.
So I think if you look at your travel documentation, there's going to be a start point, end point, right? Your airline ticket's going to have a start point and end point. So the start point, that's good enough. If you have a travel documentation from New York flying to Georgia, that's good enough. That documentation shows that this person was hired in New York, and that date's got to match up. So their deal memo that they sign, you got to make sure that date matches up to when they were actually in New York, not after they've already arrived in Georgia.
All right. Well, thank you very much, panelists, Christina, Pedro, and Alan. This has been just a litany of information, and it's a lot to take in. I'd like to remind everyone that if you want to revisit this webinar or share it with your colleagues, It's going to be up later this afternoon at theproductioncommunity.com. Please log in there and watch it to your heart's content, but feel free to share with friends and colleagues. And I would like to let everyone know that there is another webinar coming up in just a few minutes at 11 o'clock that does tie to this topic, and it's about document storage and retention. Smart Hub Vault will help solve your production and corporate needs. That is happening in 25 short minutes at 11 o'clock. Also tomorrow we have 2 more live webinars happening, one at 9:30. It's going to be about insurance, a view of workman's comp and general liability in light of COVID-19. And then last at 11 o'clock tomorrow, we are going to do a walkthrough of Sync Onset Asset Hub 101, which is a really, really exciting product about continuity onsets. You can register for those at theproductioncommunity.com. I'd also like to remind everyone that in just a moment, you're going to get a survey when this webinar ends. Please fill it out and also make suggestions for future topics that you would like to hear. About theproductioncommunity.com. In addition to revisiting this, you can also see all of our previous webinars there. Please just check them out under Industry Insights and under Products. Also at theproductioncommunity.com, you can listen to podcasts with EP experts about important industry topics. If you're looking for a job, post a resume. There's a whole resume section there. You have access to EP's entire free product training library, including how-to videos and other great resources. Another website that I want to draw your attention to, my.ep.com. Access the last 3 years of your EP pay information, and most critically right now, if you're filing an unemployment insurance claim, you can get the information that you need to file that claim at my.ep.com. Also, we have launched an e-learning center at my.ep.com. And for freelancers through May 15th, the content there is going to be free, but only until May 15th. Production Accounting 101 is available, and starting today, Smart Accounting 101 is available. So freelancers, please take advantage of that opportunity between now and May 15th. Now, we talked about Smart Hub Vault a little bit, and we're going to be talking about it more at 11, but I just want to mention that for your working at home efficiency, EP and our partner GRM can help you today with digital mailroom and digital conversion services. So we want to let you know that EP and GRM scanning service is available even though we're under stay-at-home orders. And EP's Smart Hub Vault solution enables you to have secure, compliant, remote access to business-critical documents and data, as well as workflow and collaboration tools for remote work environments, which is why we're offering a free 60-day pilot for up to 10 users. If you're interested in that, contact us at masters@ep.com. But even more importantly, join us in just a few minutes at 11 o'clock, and you can hear more about it from both EP's experts and our partners at GRM. Last in our series of shameless plugs, the new movie Magic Budgeting is available for download at the end of April at my.ep.com. Please purchase it there as soon as the end of April rolls around. We're very excited to launch that product. You'll notice a theme. My.ep.com is a website that you are going to want to bookmark as a vital EP resource. Please bookmark that along with theproductioncommunity.com. Thank you so much for joining us today, and we will look forward to seeing you again in our next live webinars. Stay safe out there, and we'll talk to you soon.